Yeah, I completely agree with you. I mean, most people have a consensus that the trade war is going to impact Chinese growth by approximately 0.5%. However, as you've pointed out, the real issue with China is not the trade war. The real issue is the excess debt and the slowing economy and the misuse of capital. That's a long-term issue that is much more front and center for Xi Jinping than the trade war. That's why he wants to do a deal and get this out of the way so he can focus on the more serious issues of the Chinese economy.
Just one number, European listed firms are expected to receive 456 billion euros in total revenue from China in 2019, which tells you the extent of the China's market's dominance on Europe. And that's just one key market. Are you saying if we get through the trade war, you won't see better confidence in Europe?
Yes, you will see some confidence in Europe. There will be obviously an uptick because this has been a drag on global growth, and it's a drag on the profits for European and American companies that do business in China. And it's also a drag on the Chinese economy, which is a major contributor to global growth. However, then after that's all happens, we have the residue, we have the major issues left over, which is the economy I just mentioned, and also, as I think you've been discussing, the move in the supply chains. I mean, I talked to a lot of people here in Hong Kong and in Shanghai and Beijing who are basically said, look, the world has changed. We've got to get out of a lot of our operations from China. It's too risky. We don't know if this whole trade war thing will blow up again in 2 years. So we've got to start now, and whatever happens, we're going to shift to Vietnam and India and Indonesia. So that is going to have a major impact on the global supply chains and also on profits going forward.
I want to just jump in on that point because I'll throw Thailand into the mix as well. We saw a story out in the past 24 hours from Harley-Davidson. Effectively, they had to move some of their facilities to Thailand when they're making goods coming into Europe because of the tit-for-tat trade tariffs that took effect. That meant selling into Europe was much more expensive and impacted their operating margins. How long do you think this could go on for if we see tariffs remain in force against key trading partners? Do you think that impacts global supply chains for much longer than many are anticipating?
I don't even think, as I said, once the trade war is settled, and I actually think it's going to be settled in this quarter, there will be a long-term impact because most large global firms have decided that they cannot rely solely on China. And this is partly because of the trade war and partly because of ongoing frictions in technology. So I don't think Thailand's going to be the first destination because the infrastructure is relatively poor there. Everybody is talking about Indonesia, and Vietnam in particular is a big beneficiary. And then India, long-term, is going to be a beneficiary. But as you've pointed out, this is going to take several years to work out. And meanwhile, there's going to be a lot of disruption in production.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.